Okay, guys, I'm going to take a look at the markets. I'm going to show you how to read it. And I know everybody's wanting a strategy. Give me a strategy, Scruff. Show me how it works. Well, we'll show you how it works right now. It's dead simple. So the first thing is, what are we going to look at? So if I look at a window of the world, this can give me a good indication as to what's going on. See, gold's moving up. USJPY is moving down. Clear correlation. Dollar down, gold up. If dollar's coming down, that's naturally going to push the euro and the pound up. Well, what have we got? They're moving up. If they're moving up, they're going to put pressure into the indices. The indices is moving down. Fine. But the indices is also closely correlated to the S&P 500, which is pushing up. So these could well just be pullbacks in the bigger picture. All right. But what it's telling me quite clearly is all's pretty well in the world. And if all's pretty well in the world, how do you figure that out? Well, look at oil. Oil's pretty stable. You know, it's just moving up and down. It's in a bit of a consolidation. All is well in the world. Now, we know that when we look at the likes of sort of world events, there's not a lot going on. You know, it's pretty quiet. So the world is stable. It's not kicking off about the war. Political upheavals have kind of changed a little bit. All these little bits and pieces. So all you do is do a basic trade. Now for me, I've already worked this out. I think oil is a reasonable buy today. It's not the best buy in the world because we haven't got the higher time frames confirming. We're on the lower time frames. Now, I've done the write-up for this in the WhatsApp, and I've done a big write-up for it in the Discord and told them what we're doing. Why? Because I should. So here, if you want to come in this Discord, it's free. Just follow the WhatsApp, and the only cost of entry is you have a bit of a chat. That's it. And you never know. Might have a laugh and one thing on. But there you are. Told you everything that's going to happen with this market before I'm gone to market. So that's one of the good things about following it and getting involved. Now, I also do Asset of the Week and all of that thing where I release it before sort of 7:45 on a morning for every member of the squad. You know, so if you're part of the squad, you get to see that in the morning. If you're not, well, you see it mid-morning sort of thing. But what else can we see? Well, we can see the dollar is low, which explains why gold will push up. All these different things. But I'd be really careful with this because it's only got one way to go, which is up. So, kind of need to be, should or shouldn't I? Well, there's a simple answer to it. Yeah, you should. Just be careful. So let's look at this a little bit deeper. Now, this is ready pretty much to go to market. We've got all of the momentum, strength, and everything in our favor. Now, the entry point is the best of 5. 1, 2, 3, 4, 5. So it's kind of across the top of here. And I want to see if I can fit my trading. Well, if I enter here, yeah, I've got room up to the top. So all I need to do is just put a half decent order in. I'm going to set it at 25 pips just to be on the safe side. Now, I'll explain that in a second. It's there. Right. Now what I'll do is I'll follow the candles down, but I'm going to leave that as my target point. So if I can get a better price, which I now can, I can increase the target to that point. Okay. So that's one way of doing it. So further it goes down, the bigger the target becomes. Okay. So the next part of the puzzle is, why is it going up in the first place? You've put your order in, Scruff. Why are you trading it? Well, I'm trading because all's well in the world. It's Monday. So I don't trade currencies on a Monday because the market hasn't set up for what it's going to do this week. Gold, well, I'm already trading gold, or I should say I've already traded gold, and I've done okay out of that this morning. So there you go. There's my gold this morning. I've already done 100 quid on that, so I don't need to do anything more. And now I'm left with this. And if I can get 100 quid out of this, it's my 200 quid on the day. But indices is difficult to trade on a Monday morning. FX is difficult to trade on a Monday morning. Oil, not so much. Oil, you can trade anytime you want because it's what's called a world driver. I am aware of the open and it can spike. It's not quite as violent as on the currencies, the indices and gold, but it does spike on the open, but it's not wild. So all I have to do is let the open finish, 9 o'clock, do an analysis, and then look to start going to market. Now you'll see the blue lines on here. The blue lines represent entry exits. They are the areas where I roughly want to get in and I roughly want to get out, but they'll break up the chart. Now the way you find them is through a Fibonacci. You look for the price as it is now, and you look back in time to the last major high and low that you consider as valid, encompassing the price. Major high, major low. Okay. Now you could say it's here, but then again you could say it's here, and so forth and so forth. But you also want to see a strong move in a singular direction without too much of a break. Well, that pushed up, came down with some gusto. Pushed up, came down with some gusto. Pushed up, came down with some gusto. Pushed up, didn't come down with any gusto. Screamed to where it found its top, then came down. That's the fib, this move here. That top and that bottom hasn't been broken, so therefore the levels in the middle will all be valid. The only thing I need is the direction. The entry point came from the 5 candle comp back, and then it's just a case of follow the candles till it enters the market, and then you can manage the market. That's the key element here. It's not about trying, right, it's entered the market now. Okay, so what I can do is take it down and I can look to see where things can go wrong. Well, I've got a barrier, I've got a barrier, I've got a swing, and I've got a barrier. Now, for this particular market, it's pretty brutal. In fact, it is. So I don't really want it to go much past this swing point here. Okay. So what I'll do is I'll stage down into there. And once I get to this point, I'll be thinking, have I called this right or wrong? And make a decision to get in or out. Okay. There's no way I'm going to let it run past this point here. Okay. So that is as far as it can go. But as soon as it gets here, I've got some worrying things to do. So I'm going to let this play out. I've got some things to do for the guys in the squad now. Just answer their questions, answer all my emails. I'll do it as I'm going. And I'll let you play it out. And then I'll come back to you in sort of 30 seconds time or however long it takes to take it out. Because I'll just speed it up for you and put some music on. And I'll tell you whether it's good, bad or indifferent. Let's see what happens.
Well, we watch and wait. I'd buy that for $1.
Okay, guys. Looks like we're coming in to close this off. It's looking pretty darn good. So what we're going to do is we're just going to shut it down, Let it get to about 120 quid. It's testing the level that I put in. Oh shit, it's pulled back. That's no good, is it, boys and girls? Oh no, come on, up you go, come on. Ah, bollocks. Oh dear. I'm not worried. We're just moving into the 10 o'clock candle now, so it's a new candle opening. It's the first burst of that 10 o'clock. All the pressures are still seemingly in play. If I just flick this on a second, I'll be able to show you. Just cancel that off. Just show you. So you can still see the pressures are still there. So I'm not overly worried at this moment in time. I only want about 100 and a bit quid out of it. Like I say, I've already done quite well off the gold. So I don't need to stress too much. But we shall see. So what I'm going to do is... Oh, hold on. There we go. I can probably take that out now. Oh, there we are. It's already done it. So that's a nice 134 quid. Wouldn't you like that on a morning? I'd like that on a morning. So let's just quickly take my tickets off. Get yourself into a habit of closing tickets down. There's a few of the guys being caught with this, and I've certainly been caught with it over a long period of time. If you're using pending orders, which I do, sometimes you can forget them. And there you go, 134 quid. So it's just 3 minutes past 10. Still pretty much where I thought. I could hold that up to there if I want to. But the crux of the matter is I don't want to. And I'll explain that in just a second. I set an area what I thought was reasonable. This allows for the spread, allows for the pushing, etc. And what that means is I'm not really risking the account. Now, there was a big backlash at the weekend about, I was saying, is trading gambling or not, and one thing or another. Everybody seems to think it is, but with that same statement, everything in life is a gamble. I had surgery on my neck, and I was told there's a chance I'll be paralysed. So was the surgeon a gambler by doing the operation? No, he was a trained professional with a known outcome based on known facts that he's done numerous times. Trading's no different. Everything in life is a gamble if you want to look at it that way, but it depends on how you assess gambling. Gambling to me is a punt on an outcome that's based on chance. If you've got variables in place that you know what you're doing and you want to gain from that, you've done your research, you've done it 1,000 times, so you know what you're doing, there's a known edge, etc., 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 then it's not a gamble, it's a job with an outcome that could possibly go wrong, which is for us all. You could cross the road and get hit by a truck, but is that a gamble because you crossed the road? No. It's a known outcome based on variables that you can see. The road's clear, I'm going to walk across, there's a fair chance I'll get the other side. If I didn't look left, or somebody came from a side street, it could happen. But there you go. Heart attack in the middle of it. So there's many different ways to look at it. But look at this. All right? Everything told me it was going up. Now, you see me do this over and over. And it's all about the planning. Now, I break everything down into high time frame, mid time frame, low time frame. I look for confluence right the way through it. I look for the best opportunity based on strength. I then look at correlations, which is the best market to trade at a certain time. Now, I know Monday morning Forex is terrible. I know the indices is terrible. Gold, it could go either way. But the one thing I do know is 8 o'clock is a nightmare. So I avoid it. Most people don't. They dive in at 8 o'clock because the markets are moving. Is that sensible, or is that taking a punt? Who knows? Because an open is an unknown variable. The money flow's coming in. You don't know where it's going yet. It's unknown. 9 o'clock, you've seen it. You can react to it. So these are the things that I do. But then I break the trade down itself into the stop has one job. It only protects the account. And the target is what you get rewarded for doing your research. They are separate. Because if you do risk-reward, RR, and I see it all the time, and every person that was arguing about gambling will probably be along the lines of RR, it don't work. Because you're trying to force one unit to 3 when maybe the market won't give you 3. That comes back to research. And this is what I do all the time. And I do it day in, day out. And I'd like to think I'm reasonably good at this job. Because it is a job. And if you're just looking for strategy, jumping from video to video to video, good luck. You would still be doing it in 2 or 3 years. If you understand the economics behind the chart, why it's moving in the first place, and how to read the chart, then you're fine. Because ultimately the chart is a series of numbers. Series of numbers create ratios. Ratios are from percentages. It becomes relatively simple. It's a mathematical equation. Easy stuff. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.